The stock market just took another dive, and it's got everyone asking the same question. What's going on? Is this just a short-term correction, or the beginning of something bigger? In today's video, we break down exactly why the markets are sliding, and what it means for your investments. What's causing the market drop? So what's driving the recent sell-off? There are two big concerns spooking investors right now: 1, the U.S. federal deficit, and 2, rising global tariff threats. Let's break these down. The U.S. is racking up record-breaking debt, over $34 trillion and counting. When the government borrows heavily, interest rates rise, the dollar weakens, and investors get nervous about inflation and policy shifts. It signals uncertainty, and markets hate uncertainty. The tariff tension. Meanwhile, global trade tensions are rising again. There's talk of new tariffs, especially between the US and China, plus pressure on imports from Europe and developing nations. Higher tariffs equals higher costs equals lower profits. That hits businesses and consumers alike. How are the markets reacting? The market response? Immediate. The S&P 500, Dow Jones, and Nasdaq all saw red days, with tech and consumer sectors hit hardest. Big institutional investors are moving into cash and bonds. Retail investors are confused. And fear indexes, like the VIX, are climbing. But this doesn't mean we're headed for a crash. It could just be a correction, and even a buying opportunity if you know where to look. What should you do as an investor? So what does this mean for you? If you're investing for the long term, this dip might be a chance to accumulate assets at a discount. Here are 3 smart moves you can consider right now. 1. Stick to your strategy. Don't panic sell. Time in the market always beats timing the market. 2. Diversify more. Make sure you're not all in one sector. Mix stocks, bonds, ETFs, maybe even some real assets. 3. Watch interest rates and inflation. Keep an eye on what the Fed does next. Rate hikes or cuts will affect asset prices significantly. What the experts are saying. Economists are split. Some say this correction is overdue, a rebalancing before a strong Q3 bounce back. Others fear a recession if tariffs worsen and debt pressures intensify. One thing they agree on: we're entering a period of higher volatility. The markets may be shaky, but with the right mindset and smart strategies, you don't just survive volatility, you use it to grow. Want to stay informed and in control of your finances? Hit subscribe, and I'll see you in the next one. Thanks for watching, and remember, the storm always passes. Stay focused. Stay smart.